Good morning, fellow technicians. It's Greg Schnell, and I am here with the Market Outlook show for the month of February. And it's been a bit of a rocky start to February. We've literally been through a bit of a zigzag here with markets kind of peaking out pretty much at the Fed meeting and tumbling ever since. The rebound on Friday was nice to see, but it's been a rocky start. So anyway, we're going to cover off some of the market and start to work through that. So to start off, we have a couple of things we want to go through. We're going to discuss how to look for long reversals, because I think one of the most important things to do when the market is pulling back is looking to try and find some ways to find things that are about to go the other way. Some of the new breakouts are happening, and we're going to cover that off. I briefly want to show some examples of stocks like Twitter or Shake Shack and discuss those. There are some longer-term concerns starting to show up on the charts, and obviously just because we've had a 10-day pullback doesn't mean that we're in a new bear market, and I'm sure Tom and Aaron all through the week have discussed that. But I think the bigger thing to look for now is how momentum changes as we go forward. So normally when you make a market top, as an example, you would go up, then you would pull back. So let's just say we're in the pullback. You will almost always, the market will go back and retest the high. Now, if it loses momentum on its way back up to retesting the high, that's another story. But in general, you know, the S&P bounced off the 200-day moving average yesterday. I would fully expect that to be a major point of support here. And some of the stronger stocks I would expect to start rallying now. We're also going to cover off the book for the second part of the show, and the reason for that is the book is now available, which is nice, but we also have an opportunity. If you have questions about what's in the book or why what's in the book, I'd be happy to answer all of that. And then we're going to get into ChartCon 2018, and ChartCon is a massive event for StockCharts. So we put a bunch of time into bringing a whole bunch of great speakers together, putting them all in front of the screen, and then bringing them to you. So there's two ways to attend ChartCon. One is virtually, so you just log in much like you're doing today. And then the second version would be you buy a VIP ticket, actually come out to Seattle, and we have a very limited number of those seats. I think there's still a few available, but I think it has to be done by February 14th if you wanted to get in on some of the VIP stuff. There is a huge amount to cover off today, so I should probably get going right into it. But let's first of all talk about the book, because we started shipping yesterday, which was very, very fun. So just to give you a little background, I started the book in May of last year. Started talking about the book in May of last year and wrote it through the summer. I finished my writing in September, and it takes a long time for the book to go from finished writing through the edit process and actually into the shipping process. So the book is now out. I physically saw one for the first time this week. That was pretty exciting. And then I signed off a huge amount of copies, and those have already shipped. So if you'd like to get a book, they're going to be available in the StockCharts bookstore, but the ones that we had originally ordered are all spoken for already. So, but the book is available in the bookstore and will be shipping more next week. So feel free to order them. When you order them from the StockCharts bookstore, it's $14.95. The price on Amazon, which hasn't started shipping yet, is $26.99. So there's a big difference in the price there, and you can check that out. I think there's lots to cover off. I should move into the presentation so that we can get through it all, because I have so much that I want to get done. First of all, let's talk about the overall market. I think everybody's seen this member page, and depending on what level you are, you'll have either pro or real time up here, extra member, that kind of thing. So I'm a pro member. The difference between pro for the most part is it gives you more time options, it gives you more refresh options, more charts sharing options, chart list options, that kind of thing. But in this box in the middle, this is static for everybody. What you see here is I've moved the tab from the Dow Jones over to the S&P 500. Chart looks almost the same, but now you'll notice it's down here. So either down here or up here is how you can control what's on that screen. But if you click on this screen, it will bring up 4 different types of charts, and you're allowed to set these charts up. So this is the 10-minute view of the S&P 500. And what you could see is pretty much a 5-wave pattern down. So this is wave 1, wave 2, wave 3, wave 4, wave 5. And so now we're expecting a bounce. And again, this is all very short term, but we have bigger implications going on the next chart. And so this is my daily chart. What you see here, if you watch the broadcast on Thursday, the commodities countdown, I was expecting some sort of a flush down to the 200-day on Friday and a pretty good bounce from there. And we had that, and this is what's called a hammer candle. Martin Pring wrote an article after yesterday's close with that hammer candle on it, and he specifically discussed, let me just clean up my screen here. He specifically discussed what hammer candles mean, and they're good for about 5 to 10 trading sessions. But normally we would get, when you get a hammer candle, the market opens, it goes down and closes, and then it comes up and it actually closes higher than it opened with a long, what we call buying tail below it. So that's in StockCharts speak, that's exactly what we had. So we open, we test lower, we bounce back up, and not only we made it above yesterday's close, we made it above the morning open and closed higher. So this is called a hammer candle. Looks more like a candle when we're on a candlestick. I'm not going to go there right now, but this is the kind of setup that we're looking for a market bounce. And the Russell was at its 200-day. The NASDAQ was close to its 200-day yesterday. So there was a lot of reasons for the market to try and bounce there. While we might be still trying to make a formal bottom, you can see that just looking back on the S&P 500, strokes down around the 200-day moving average are a pretty good place to look for support, and they've been bought for the most part. So I'm looking for this to be our buying point. Now the real question will be, how do we test the high? But in the meantime, this should be an opportunity for us to get long on the market, and we should be able to figure out different strategies for trying to attack the market. So today, that's not the right word, to try and choose to invest in the market. So today I want to cover off some of that stuff, how to look for longs now that we've had our pullback. This is a meaningful place to look for a test of the market. And so now we want to go and find the right stuff. So I'm going to cover that off today. The point and figure chart for the S&P 500, you can see we are here. So we've made a lower low. So now we're on what we call a sell signal. And the reason we're on a sell signal is because we actually went below a previous column low. And what that means is the market came down, bounced back up, didn't make a higher high. That doesn't matter. All of this is trading range until we take out this low. So we've done that, and now we're moving down. So we're on what's called a sell signal. But in market speak, that's exactly what that's exactly why we're going to be cautious as we look to buy back into the market, because we're not in this big bull trend that we have been in. We're in something different. Okay, so with that, I wanted to cover off a couple other things, but I'm going to do that in a little bit. First of all, when you look at the ticker cloud, this is a pretty important place, and for those who haven't figured out how to get there, let me just go show you. On this list over here on the left-hand side, as you scroll through, you can find a ticker cloud. And the ticker cloud used to occupy the homepage of StockCharts. But on this ticker cloud, it shows us the most active ticker symbols that are currently being watched right now. And the larger they are, the bigger they are. So HMMJ is the marijuana ETF. It just happens to be in the middle here. GLD's being really looked at. Here's Gilead. I looked at that chart this morning. GE, that one's been under a lot of scrutiny. BlackBerry's in a little larger font here. So just as you're looking around, it gives you an idea of what kind of people are looking for. Here's Twitter, and we're going to talk specifically about Twitter today. And I also want to talk about Shake Shack. That's this one right here. And the reason I want to talk about those is because those two stocks are acting very interesting. And the reason to look at them today is because of their price action. So from the ticker cloud, you can get an idea what people are watching. And I think this is a pretty important place on the chart, on the StockCharts page. Okay, so let's go to Twitter. And what we see here on Twitter is that this is the stock has been up as high as $74, pulled all the way back to $13, spent 2 years building a base. Last week started to eke above. So remember, the S&P 500 was pulling back last week. This week, it absolutely popped. And so somebody would say that's a pretty risky place to buy. And I fully agree, but what you find is stocks that are really strong when the market is pulling back tend to also be in a good place to look for new buys. And so we're going to jump in here and look at PayPal. And what you see on PayPal was market going sideways, and it jumped up and then it pulled back down and tested what we would consider support. So if I was to draw a line in here, 41.42, came back down below that, sat around the 40-week moving average for almost 5 weeks, jumped up, pulled back, really testing people's commitment into this stock. But it went sideways, 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 and then look what happened here. It jumped, and it jumped above all previous resistance, and then it never looked back. It literally went on a run. So while this looked like a very risky place to buy, it was actually the cue to get on board. And, it was almost a double from 45 to 86 or whatever. Staying above the 10-week moving average for almost the whole period in here, it starts to get a little dicey. Now you can see it's a bit of a change in trend. So one of the things that I would like to look at is this particular candle. What you see is a volume surge came in, the percentage price oscillator is moving higher, and as things are starting to improve, people are starting to show interest in the stock. Over the next 6 weeks here, this stock really had a lot of volume coming in, all in up weeks. You can see it just kept climbing up and out of the position. Nothing's easy to hold. You're going to see, here's a $55 high and a $50 low. So just in the middle of a pullback or of a huge uptrend, this thing moved 10% in a week. And, shaking out weak hands, but it ends up going on a big, big run. Okay, let's go back and look at Twitter. What we see now is this thing is just starting to get breadth. And look at the volume candle here. I mean, this is as big as it's been in 3 years. So all of a sudden, this stock is getting more price action in a down market than before. And so it's a pretty interesting place to buy. And if I'm looking to get long, I want to find something that has strength, especially during a market pullback. And in this particular case, it's been a bit of a vicious market pullback because we pulled back so aggressively. But this Twitter stock literally lit it up. You're going to need at least a 10% margin of error. So in this case, stock's trading at $31. Well, the problem is support is down here at $25. So you're, almost 20% away from the support line. But when you see these huge volumes step into the stock, you have to give it a little bit of room to work. And if this is going to be where it bounces, we should see Twitter kind of move up, and away from here. So it's those kind of things. And I've got some technical scans that we can go look at here in a little bit to help give you some ideas to find other stocks. But in general, Twitter had been, its upward momentum has been going on for a while in terms of the PPO. And so this breakout right in here was pretty nice when it went positive and kind of got above all previous highs. That was one nice clue. So we could scan on a new high on PPO. We could scan on, full stow getting over 80. We could scan on a positive full stochastic turn. So the stochastic goes above its signal line. We could use the scooter rankings for a scan. There's a whole bunch of tools that we have available to us to try and find those. I specifically want to cover off that type of price action. What's going well, and how can we look for that? Okay, so as an example, I like Twitter here, and if I was a buyer of a stock, this would be one that would be on my consideration list. Okay, so now let's go to Shake Shack. And Shake Shack's a little different. So I'm just going to get rid of the 2 years it hasn't traded over here. So changing the chart. And what we see here on Shake Shack, so these are weekly charts. On the market outlook, I'm not trying to be a day trader, but I do like to look at the bigger picture. And what we want to see is this. I like to look at the bigger picture and trying to use that for my analysis. So in this case, Shake Shack was a $20 stock, came out, shot up, went all the way to $100. Everybody said it was going to $1,000. Ended up being a parabolic move. We might have heard those words lately. And then the market pulled back hard, gave a big bounce, and then fell all the way down, and nobody had any confidence in this stock for 2 years. So let's just draw a line at 39.75. They don't pay a dividend, so we can get rid of our event. So we're going to go horizontal line, and you could use the annotation tool, or you could jump in here and just pick a horizontal line. I'm going to go thick. I'm going to make it red. And what you see on this chart was basically we hadn't gotten above it for, a year and a half, and then we had this huge burst. That might sound reminiscent of Twitter. And then all of a sudden it pulled back, and it came all the way back down to support. So nobody said investing's easy, but everybody said, you want to make a lot of money in the market. So this is part of the problem, is we get this big surge, and look at that. It closed the week on the high and then has twittered back or fallen back for almost 10 weeks now. And so you've got this this burger chain that originally had huge expectations, sounds like Twitter, fell apart, built a giant base, and now that base is under construction. So I put out Don't Ignore This Chart article this morning about this particular stock, and so let's just go get it, and I'll show you what I wrote in there. So under the blogs tab, I said Shake Shack has a nice flavor here, and there's another link to an article I wrote about it when it broke out. Okay, so what we see on the chart here is the scooter ranking is actually making a lower high. That's not really the trend we want to see. And the full stochastic is pulling back. Now, it's still above 50. And one of the things you'll find in strong stocks is they actually bounce around the 50% level and go on to make new highs. Now, this hasn't been a strong stock for a while, so don't be looking left on the chart trying to find one where it bounced above the 50. What we're looking for now is this big 2-year high told us that something's happening. We didn't get the volume surge on the breakout that we might have liked. It wasn't bad. It was above average, but it was below some of these. Now, compare that again with the Twitter chart. Twitter gave us the largest volume ever, and so that's a really big thing. If we go look at Microsoft, and I point to that in the Shake Shack article, when we got a big burst in this candle here, so we had a base building, this was a pretty good volume surge. Wasn't the highest ever, but it was above it was above almost 50% above the average volume on the week. And then the chart just went sideways for a while, and then here it starts to break out and slowly work its way higher, and it's like, okay, is this thing ever going to move? And then it gently starts working its way up, and each one of these is getting a volume kick. But then it just goes on this nice, beautiful climb for a year and a half, and it's been, quite frankly, stunning to watch. What you'll see here is the full stochastic has pulled back and stayed above 50 all the way through. The scooter ranking, while not being one of the best performing stocks out there, says price action is nice and solid. It's holding above 50%, and it's been on a run for almost 2 years. So it's the volume kick that we want to see. And if you go back in history, like here's Microsoft way back in 2013, and I think, you know, time goes so fast, but I think this is when Steve Ballmer was retiring. And we got this huge volume surge for a couple of weeks, and everybody would say, really, in Microsoft? Because it had been a dog for many, many years. And then all of a sudden it breaks out. This was a double from 22 to 46. And then from here, it's been, call it 38 to 96. Been a pretty good run. But when you get volume on these breakouts, this is a pretty important place to look. And here's the 2016 low, and guess what happened on Microsoft? It pulled right back down to its 40-week moving average and moved up from there. Now, again, wasn't an easy trade because it just kept holding for almost 6 months, and then it broke out. So I would say it puts you on watch that there's price action there and that there's a reason to start, you know, paying attention. So here in the case of Shake Shack, it's pulling back to this support line, and we don't need to, you know, if you bought it here and it was falling apart, this is, you know, problematic because, you know, the market was going up all through this period, and here we had it falling. So the stock was underperforming its peer, and that's kind of what the scooter ranking is telling you, is it's weakening. But what we want to watch for, if this is going to be a breakout stock, is we want to watch it come down, kind of stay strong at support here, maybe around the 40-week, and start to bounce and come out of here. So I'm looking for strong stocks that have recently had a breakout. They come back and they're testing support. That would be a nice way to look. I'm looking for stocks that in the past week have had a weekly full stochastic turn up. So the way a full stochastic works is the scale is from 0 to 100. And in this case, the setting is for 14 weeks. And so what it does is it looks back for the last 14 weeks and says, where is the price in that envelope? So if we measured off 14 weeks, roughly 1/4 of a year, what we'd find is on these 3 months, we're about 50% of the way through. And so that's what the full stochastic tells us. Now here in this turning point, we were at the bottom of the range. So we were near whatever, call it 10% of the previous range. And then you start to get this buy signal where it starts to turn up from here. So it's below 20 and it starts to rise. So when you get these turns, these are nice places to look on the chart for stocks turning up. So as an example, this week, we'd like to look for full stochastics turning up. And in the coming weeks, now that we've had a pullback, let's watch for stocks that either just have the full stochastics go back above their signal line, or stocks that have pulled back for, you know, a period of time and are starting to pull up from a very big low and move to a higher high. So the way we would do that, let me just see if this is here. Yeah, the way we would do this is, so country is US and type is stock, whatever, you can pick whatever volume level you want. The important word here is the weekly full stochastic, and this X in here implies that it's crossing above 20. So you could just screenshot this, come back and look at the video, whatever you'd like. But this is a very simple way. We're not doing anything magical here. We don't have a whole bunch of parameters. We're just looking for weekly full stochastics that were below 20 and are now crossing above, which is what that X implies, 20. And if you wanted to find full stochastics that were crossing below 20, you would put the 20 ahead of the X and this other half behind the X. So you would just reverse the order of the clause and say, when is the full stochastic falling below or crossing below 20? So in that case, you'd say the 20 is crossing above the full stochastic. Okay, so hopefully I've explained a little bit about what that does. We're going to run that scan. And when we run that scan, it opens up and we get a result. Now, one of the things that I like is that we get this page all set up here, and I like to sort it by scooter ranking. And then I'm going to take this information, and because I want to go through these stocks one at a time, I just want to go and put them in what I call a scan dump. And so I'm going to replace an existing chart list with these results I'm going to pick, I have a whole bunch of scanning ones here, and you can call the titles whatever you want. I used to call it Scan Dump 1 and Scan Dump 2, but it wasn't very memorable. So now I've got, George, Paul, John, Ringo, whatever, all of those guys. Here's Dire Straits. You can use music. You can use other technicians. So I've got John and Martin in here. Pick whatever you want, have fun with it, but put some names on there. The bottom line is whatever's in your scanning folders, you don't care. So never save anything in scanning that you want, because if you start to go back and check what's in a scanning folder before you write over it, the problem you're going to have is you're never going to get any work done, because you're looking at old chart lists, new chart lists, and you're going to keep getting caught up in it. Okay, so I've moved these charts into a chart list, and what I can do, I've got it sorted by scooter ranking, and obviously these ones that are down here with some of the worst performing price action, probably not the area I want to look, but I wouldn't mind knowing what's pretty strong this week. And so we can just quickly go to 10 per page and take a look through the charts, and setting this up here, you see these have pulled back. Now this doesn't have the full stochastic on it, so what I could do, I could click in, and this is my full stochastics weekly chart setting like this, and you can see we're getting this turn up right now, and I can apply this style to all of the charts in the chart list. So apply the current chart style to all charts in the selected chart list. Let's just make sure, but we should be in the scanning chart list, yeah. And so with that, we're going to apply the style, and when we do that, it says, do you want to change the period setting? Well, the other chart was 18 months. We want it to 5 years. So yes, we do. And any annotations are changed or removed when a chart's period is changed. That's okay, because we don't have any new annotations on these charts. So we get in here and we're working through this. And so here's a chart that has been beaten down for a couple of years. And it's, if I'm not mistaken, this is a pretty ugly chart, but what we see here is it's almost starting to make new 52-week highs in here, pulled back, and now we're kind of at support. So this chart's pretty interesting, and look at the scooter ranking. Now it's pulled back in the last couple of weeks, but this chart looks pretty nice, and you could set your stop right here. If it goes below the previous 5 weeks prices, you probably, there's no reason to hold it. Why wait for it to get that weak? So very quickly, you can make a decision on this. Now, let's go back to our view all. And again, by sorting it, by preserving the sort order, I put the strongest scooter first. And so, while this chart looks ugly in general, the last year's price action has been pretty positive. And, even here, it pulled back, and now it's been climbing right on the 40-week. So if it can't hold up, I want out right away. But it's starting to get back above the 10-week and the 40-week. It's made higher lows for the last 6 or 7 weeks. These 2 weeks in here are ugly, but so has the market been. So give it a little bit of room. But remember, I talked about the positive PPO on PayPal. It broke out, pulled back, and then started to rise. This is a really nice chart setup, and it might not work out. Technical analysis is about improving the odds, not about 100% guarantees. If we found any of that, we'd all do it tomorrow. So in this particular case, this trending is really, really nice. The chart shape is okay. It's not okay on the big picture, but it is a biotech stock, so perhaps their technology is starting to improve. And if you can catch something, on the biotech low, and all of a sudden it runs up for 6 or 8 weeks, and this went from whatever 66 cents to 6.90. There's a little bit of money in there at 600%. Here's Infinera, and this stock was a $6 stock, and all of a sudden it comes jumping out of the chute. Now this is a little harder to buy, and the reason it's harder to buy is because it's done this before, then did nothing, and then broke down again. But the volume is enticing. There's no doubt about it that something changed on the stock this week. This is pretty big. It's the highest volume in a year. Maybe it's something that they announced at the annual biotech conference, or something that kind of gave it a February kick last year and a February kick this year. But it's definitely something to put on the radar. If this stock is going to start improving, this would be the time to look at it, because it did this, remember, in a falling overall market. So here's Lumentum Holdings. Oh, this is a really nice chart. So it was in a big uptrend, pulled back, and while the overall market is falling, this thing has shot up 10 bucks. Back above its 40-week moving average. The full stochastic has just given us a positive turn. The scooter's back above 75, saying the price action some of the strongest in the market. And our PPO has come down and is just around the zero line and the highest volume ever on the week. That's a pretty tempting chart. So again, just working through these one at a time, that's the kind of thing I'm looking for. I'm looking for something that in the big picture has pulled back and might be an opportunity. Here's Vectrin. I wrote a Don't Ignore This Chart article about this one on Friday. And so I don't know if you saw it. Let me just go see if I've got a tab that I could go grab. Here's a ticker cloud. So blogs. And here's Vectrin kicks up. And so, you know, this is a nice change here going back above the 10 and 40 week. There's a little bit of information there for you about kind of one of the things I like about it. But when you're looking at these stocks, that's how I like to approach them. Is I'm looking for something that's pulled back. The chart shape is nice. It's setting up. Look at this volume jump. This is the biggest volume in 5 years on this stock. And it's not like nobody's been paying attention. Somebody's been making money here. So this full stochastic gives you a buying opportunity in the last, you know, roughly every 6 months. And so that's kind of fun. And it looks like, you know, while the market's pulling back and everybody's miserable, this thing is making 1 month highs, but on the bigger picture, it's starting to tell us this might be time to show back up on the buy button. MDU Resources Group, well, that doesn't look like an uptrend or a downtrend to me. It's just consolidating sideways. Broke below support, bounced back up. Volume's kind of meh. So this one, just with the other charts we've seen, I would delete. Walker and Dunlop, finance, mortgage, and you know the chart shape's okay, but it hasn't done anything in a year. You know, it's hard to get really excited about that. I do like the full stochastic turning up here. The PPO is setting right at 0. You know, that's a nice place to get on board if it is going to go for a run. And if it doesn't go for a run, I definitely wouldn't wait for this week's low. I'd, you know, set it right up here. I don't know if it can't hold up, because remember, we think the market's going to bounce this week. If it can't hold up, then I want to out relatively close, so my stop is $1 or $2 underneath this. But the volume was good, 1 year volume showing up, and gives us a reason to like it. Here's another new tech stock, new utility stock. Nice uptrend, pulled back. This is an interesting, you know, great place to look at it. It's starting to turn up. You know, it's not a name I know. It's a mid-cap stock. So a little bit of information on it. The volume here on this week was extra high. It pulled back so far, and now it's come back up. So again, the way the full stochastic works, what's the price action in the last 14 weeks? And it goes below the 20 and comes back up. That's what we're looking for. So anyway, again, another interesting chart shape to look at. Here's Atmos Energy. That looks like an uptrend to me, and it's been pulling back here, and now it's trying to, we've got a hammer candle this week. PPO is right at 0. I'm not really in love with the energy sector this week after, and I think I've been talking about it for the last month on my blogs, commodities continue to pause. Energy's not being supportive of the oil price. Anyway, here's the utilities, and they've been out of favor. If the utilities are starting to come back into favor, this might be a nice chart to pick up. It's got a yield of 2%. And again, starting to come back from oversold. It looks like it does this almost once a year, and it's not a bad place to enter. So if you're into utility stocks, that one might be nice. Financial and residential REITs, this has been a 5-year uptrend, and it's pulled back and given you a chance to buy it here. I don't think I'm in favor of the chart, and the main reason is because I just, you know, it doesn't get a lot of momentum higher. So it's been moving up, don't get me wrong. 3 years ago, it was at 60 bucks, and now it's at 85 bucks. It's a gain. So that's all right. Benchmark Electronics, same idea. Okay, let's go to the back half of the list just to show what might be over here. Okay, this is, you know, look at the full stochastics on this chart. Is there any reason to to be the new buyer on this big volume pile right at the end here. And I would just say there's the delete button, and I'll let that one go. Same thing on this chart. Chart shape's pretty ugly. Don't like the way the volume trades. Really odd. Prices in the pennies. I should have put a price filter on the chart or on the scan. Here's just energy distribution. These price bars are way too wild for me, and so I would hit the goodbye button. Anyway, you're working on the bottom half of the list. Here's some with the biggest volume ever on a 1-cent stock, so probably not what we want to play with. But the whole idea behind the scan is for you to find stocks that you like in your range and then just work through the chart patterns. I don't mind flipping through 100 charts and just kind of quickly checking them out. You don't have to fall in love with anything, but you can, look at this full stochastic ranking for the last 3 or 4 years. Any reason to buy this 80-cent stock? I don't think so. Here's financials and banks. The price is $25. That feels a little bit better. This thing doesn't get oversold very often. The full stochastic has rarely visited the 20 level, and when it's done, it's been, reasonably good buying opportunity. So turning back up off the 20, that's an interesting place. Look at the volume showing up here. There was big selling and big buying. Nothing wrong with that chart if you'd like a nice stable stock. Yield 6%. You can probably get by on that. Anyway, hopefully that shows you how to use that particular scan. Now let's go on to the next one. Just checking my time here. We want to get time to answer the questions on the blogs. So on these technical scans, you could use something else. And one of the things is to just scan for, I want a stock that's greater than $5, and I want the close today to be greater than the close a week ago, and I want it to be greater by at least 5%. So then you run that scan, and I just happen to have gone through the process of dumping this already, but you'd sort the scan by scooter ranking, and then there's 170 results, and then I would move it into replace an existing chart list again. Don't go look at what your other chart list, what's in there before, just dump it in there. And so here we have all of these stocks. So Twitter has the highest scooter ranking right now, and it's the #1 stock on the list. I particularly like it. We've already talked about it. But here's, you can go through and just highlight these charts. I have trouble buying that one after a $20 break. That's the VIX, probably why. Here's Atra. Wow, that is unbelievable move. Obviously, they found some new science, but the real trick was to buy that one January 1st, not February 1st. Okay, all these VIX-related stuff. Wave Life Sciences, that chart is up, and away. And the scooter rankings basically telling you they're strong. So if you go down here and just look in around the 50s to 70s, I like the 70 level and a little higher. So this is pulled back, trying to bounce after a big run. Diodes, interesting chart shape, nice volume at the very end there. But you can just keep working through these. So here's FireEye, internet security stock, trying to break out of the range. That one's interesting. Look at this one with a 25% move. Huge downtrend there, but the stock, it looks more like a staircase down, not a staircase up, so I'm probably not in love with that. Synaptics is nice, is interesting, and the reason it's interesting is I wrote about it, call it in December there, and it had broken out, pulled back, and now it's trying to break out again. Again, it's had an up week in a lousy market, and so worth considering. One of the things I should have done at the top here, I have this set for intraday, and I could set it for 1 week, and then that way just look to see how the stocks did over the week. But lots of just this one had some weird price movement, must have been a buyout. Anyway, if we got rid of that stock in our list, so the way we do that, click on it and just hit delete. And then hopefully that'll make our view all button work a little bit better now. Okay, so hopefully you can see some different ways to manipulate the stocks. Again, we want 1 week And we can either leave it in the scooter ranking, or we can say, you know, show us what's moved the most recently. And you're going to click on this sort order here. And obviously these VIX ones are probably not what we're looking for. Snap had a good week. Here's Riot Blockchain. So some of these stocks that have been out of favor starting to show up here. And again, you know, when you're looking through the scans, you're going to get everything. So the 3 times movers are going to be very volatile up and very volatile down. Okay, why don't we get into, so I've got Zach, our producer, helping me with question and answers today. Zach, do we have any questions out there so far?
Sorry about that, Greg. As far as the book is considered, no, but we do have a couple of questions as far as just some particular stocks, if you want to cover those.
Sure, we could definitely roll through that. Let me, the one thing I do want to just mention on the book briefly, and there was one other thing that I needed to talk about on it. I'm just going to close down some of these scans here. So I haven't got 50 tabs open. Okay, on the Canadian market, there's been more exchanges open, and so one of the issues that we've got is for people who have been trying to trade whatever the marijuana stocks or some of the other stocks on the Canadian Securities Exchange or NEO, they're now going to have a ticker symbol of .ca. And in the big picture, we're going to move all of the stocks in the market to a .ca following. The .to will still work and the .v will still work, but for the most part, if it's a Canadian stock, we'll put .ca on the end of it. If a stock, let's just say that 3 stock indexes did .ttt or ttt.ca, ttt.to, and ttt.v, we would not, we'd only carry the .to stock, and it would still say .ca, but it would be the only one that would show. So if another stock comes up on the other indexes with the same ticker symbol that's already on the bigger exchanges, we're not going to carry it. So we're not going to try and figure out a way to carry it. I'll call it level 2 names and level 3 names. If they can't come up with a creative 3-letter acronym on their ticker symbol, we're only going to carry under the .ca. It'll high rank Toronto Stock Exchange, the Venture Exchange, and then the NEO and the Canadian Securities Exchange. So hopefully I've explained that. If not, point that out, and I will try to go through that very closely or add more data to it. So, okay, so Zach, I think I've covered that off.
I have a
what
couple
else?
Of, questions that just started coming in as we started talking about this.
Okay.
Yeah, so we have from Rod. He's asking, will there be a forum somewhere to discuss the book content? Potentially.
We haven't talked about doing that. I do think, so just so you know, so we started to, I flew up to Seattle and went to sign some books, and we thought, you know, Greg, you know, go ahead and sign them, and we'll sell them. We'll use them for promotions or whatever.
Greg's just about fell off, just to let everybody know.
I went through 5 Band-Aids on my thumb because I guess I pushed so hard that the Band-Aid was kind of slipping or gripping on my thumb, but I almost pulled the skin away from my thumbnail, and it was almost funny. And then, so I signed a whack of books, like 1,000. Those are sold. So we blew through those like it was unbelievable. So in under a day, all of those books are gone. So for people who would like a personalized copy, unfortunately, we can't offer that again because I can't fly up to Seattle every time we need to sell more books. But the book is for sale. We did personalize 1,000 of them, and we shipped them out already. It shocked us. I mean, we had no idea that we would move 1,000 books in a morning. So that kind of caught us off guard. But I think what it does point out to us that there's a lot more demand for a blog that will cover off simple I'll call it, smaller ideas about how to use the website better. And so rather than getting into, I'll call it like a technical discussion like we're in this morning, where I'm talking about, breakouts from 2-year bases and PPO and all that kind of stuff, talking about chart settings, talking about lighter side of stuff. So it would be more about how to use the StockCharts site again. And Chip used to do a webinar on that kind of stuff. So we might try to figure out a way to do a blog that offers more of that, and perhaps we can use the comment section on the blog to create a discussion area. I don't think we haven't talked about having a discussion forum for I'll call it StockCharts for Dummies yet.
Neil is asking, where do we write to get you to personalize the book inscription?
So that's not going to work anymore. I think the only thing. Yeah, and there's our good friend Julius de Kempenaar. Schnell, I'm sure you can sign a few for ChartCon 18. And so, yes, I will definitely do that. We will. I'll be in Seattle in August, so if there was another chance that you wanted a signed book, I could do it then. But I think we've got. And by the way, Chandra, your book is already on the way. I think we've got lots of opportunity for signing if you can wait until August. But the content in the book is, I think, pretty valuable. There's a lot of stuff around chart settings that are in there. And then the second component of the book talks about, just trying to figure out how many indicators to put on a chart. Does a lot of discussion about relative strength. There's a whole chapter on why relative strength is important, 6 different ways to display relative strength, and obviously one of those components is Julius de Kempenaar's RRG. So we talk about the scooter, we talk about perf charts, talk about a bunch of different ways to display relative strength, why it's important, how to set it up, how to get it to work for you. And so that, there's chapters like that where we go in depth as to why you want that information on your chart and how to put it there, how to display it. The first half of the book is all about changing the display on the chart, understanding all of the different little tips and tricks, like how do you get this zoom box on the right over here? Well, that is this little checkbox right here, zoom thumbnail. And, knowing all of those little things like that, where are they hidden on the website? We're not trying to hide them. We put them there, but it's just making sure people know how to get them. So the book is not written for Dummies. Books in general are not written for you to read end to end. They're supposed to be more like, I've got 10 minutes, here's a chapter that I'm interested in, go and read that chapter, and you might put the book away. You can also obviously read it end to end. I read through the first 10 chapters on the flight. It was because I saw the book for the first time this week. So on the flight back, and it's easy reading. There's nothing really difficult there, but it's knowing where those little features and tips and tricks are hidden in the book. So I think there's lots of opportunity there.
We don't have too many more about the books, but again, like I said, just a couple of questions that might be interesting. Dan S. is asking, do you use stochastic RSI as an early warning signal for change of direction?
I don't use the Stoch RSI. I think for everybody, you end up having a different set of tools that you want. But when I'm looking at the market, so let's just go to that PayPal chart, and I think PYPL. So this uptrend is broken. But that wouldn't scare me off yet. And the main reason it wouldn't scare me off yet is the stock is looking for support right in here where it was previous support for November, December. If it started to break down much more than that, I'd be concerned. But I actually would expect that this is probably a nice place to look for a reversal and a test to the previous high. If it can't get up there and starts to build this head and shoulder topping structure, I would be concerned. The other thing that I would look for is on this relative strength chart here. You can see in purple. Let me just change the display a little bit. And I'll widen this out. Okay, so what I've done here, maybe I should not move so fast. I went to one of my buttons, which is a predefined chart style. The chart style is the area in the back of the chart, not the actual data, but it basically lists off all the indicators I want and how I want them displayed. And so on my basic setting, I have the relative strength to the S&P 500 behind the scooter ranking, and that way I've kind of got my two relative strength things together. So as long as they're together, it doesn't really matter. But when I want to separate them, then I would change the display from down here, instead of saying behind indicator, I move it to above, and then that moves the whole thing onto the chart here. So I've separated it out. Now, this is when I write articles and they have to be a little narrower. So if I change the width, and I'm using the custom size setting, if I change the width to 1400, you'll see that pops it out, so it fills my entire screen. Okay, so try not to speed through that and just make sure we understand how to do that. What I like to do for relative strength is this. I don't want a stock starting to make 3 or 4 month new relative strength lows. So if this is starting to underperform the overall market, after clearly outperforming for a long period of time, something is changing on the chart. And so when I start to see relative strength lows, that would be a concern to me. And we can see that the scooter's getting a little weaker. So maybe this stock is going to break down, but at least you have a clear level of support here. I would say anything below 70 bucks is probably a good buy story. It's trading at 74, 75 today. So you get to figure out how close you can set your stop and not get stopped out of a reversal higher. But that big move is exactly what we're expecting. Something comes down to support, and then the market corrects, starts to head back higher. And when it does that, this is your opportunity to get in. In Nvidia's case, which is a really odd one for me, the S&P was going up so strong that a stock like Nvidia actually was sitting at a place where it was making near 6-month lows, and then it would resume its upside trend. I'll show you that in just a second. So there we go. Okay, so if we go to Nvidia, same chart. Oh, it would help if I spelled that right. Missed the A. What we see on this chart is that Nvidia went through this period here where it was only basically keeping up with the S&P 500 for like 6 months, and then it went on a real growth spurt. And recently it was back, well, I'll call it 3-month lows, something like that, which is a bit surprising for a stock that's been so strong. And that doesn't look quite straight to me. Okay, there. So what we want to see here is that this doesn't obviously end up going down. Now, Nvidia had a great earnings report and was up 8% on the open, and then just closed off the highs a little bit. The one thing I would say is this stock's been on a tremendous run, and the scooter here tells me that it's starting to weaken a little bit because we haven't seen this sort of weakness. But it's back up in the top. I think as long as you hold up in this range here, it's pretty good. But if it was to start making new, I want to say 3-month relative strength lows, but again, we have a history here where it went sideways for almost 6, and the S&P was pretty strong during that period. But when the stock starts to underperform after outperforming for a long period of time, there's a reason for a change in trend. And when institutional investors are no longer pushing the stock or buying the stock aggressively to keep the outperformance going, there's something changing. And so that would be something that I would look for. If we go to Apple, and I just use it because we all know this stock. Okay, here is the 3-month level for Apple, and right in here it starts to break to new 3-month lows. This is the 6-month lows. And, don't forget, this stock has been outperforming for a long period of time. Maybe I'll make that line red just so it's easier for people to see. But the point is that when you have a stock like Apple, if it was going to start making new 1-year lows, which wouldn't take much, Where are we? We're February, mid-February, so down here. A new one-year low in relative strength for Apple would be a big reason for me to not look at the stock for a while. This scooter ranking down here at 30%, you can see we bounced off this level once before. The one thing, we're trying to find support on Apple at the 200-day moving average. I'm going to just save this chart here, and then I'm going to go change the chart setting to weekly. Let me just dump it in here.
Just to give you a heads up, Greg, we got a couple of more questions about the book. So once you're done with this, I'll give.
Okay, sure. So here is and the only reason we're focused on book questions this week is because the book just came out. It's not. But what you see on Apple is this stock has an amazing, really amazing ability to either be above or below the 200-day moving average. So in green, and maybe I'll change it to red, just so it's a little darker. I'm going to get rid of the 10-week, and you can either take it off the chart or you can just set the opacity to 0 and it'll disappear. I'm going to change this to red. I'm going to make it thick. That's good. And what you see on Apple is it's either above the 40-week or not. And when it's not above the 40-week, it's a pretty good place to avoid for a period of time. What are we doing this week? We are testing the 40-week. So, I mean, there's many places where Apple bounces at the 40-week, and it's a good place to be aware of. But if Apple was to make new relative strength lows, like I showed on the previous chart, like new one-year relative strength lows, why would a stock that was outperforming so well start to make new lows? And, I think I own everything Apple. I mean, I have Apple routers, Apple laptops, iPads, phones, you name it. But the HomePod hasn't delivered on time. There a whole bunch of things that Apple used to be great at haven't been great lately. And so the stock is in an uptrend, and I'm fully aware of that. But the scooter ranking at 30 tells you that, all of a sudden the stock isn't being supported as well as it has. And in this period here, while it was on the big run, Apple was one of the top performing stocks for 5 quarters. That's a pretty good place to look. That has not been the story lately. So while the S&P 500 has been running, Apple hasn't been able to stay in the top 25% of the stocks very much in terms of price action. So that's concerning to me. Now, full stochastics buy signals on Apple from below the 20 level have been pretty good, but we're not there yet, and it can also go down and wait 3 months before it actually gives you your buy signal. So you get a choice here, but the one thing I would say, you're starting to see real weakness in relative strength, and the 40-week having trouble holding up. Okay, let's go back to the book questions, and I'll try and answer those right away.
You might be able to answer kind of both of them almost at the same time. It says, Rod asked about chart packs with the book. Are we selling a chart pack with the book? And Larry asked, are you going to be showing any of your favorite scans in the book?
The book talks about how to do scans. It doesn't go into deep detail on scan. You are more than welcome to ask me for any scan I have written, and I'd be happy to share it with you. The StockCharts has done an unbelievable job of trying to improve all the stuff around scanning. And if you just type the word scan into the search box, here's a glossary about scans, user contributed scans. There's some pretty good ones in there. Published scans, these are Tom DeMark's sequential entry, classic long by Gary Smith. There's a whole bunch in there. Here's sample scans, how to do them. Predefined scans, here's a scan tutorial. Arthur Hill has written a fantastic volume of stuff about scan. So anytime you're looking for more information on scan, not that I don't want to help you, but there is a bucket of them here just by typing the word scan into the search box.
And I think that's about it for questions.
Okay, we had the question on the chart list, and I think the big thing is Arthur Hill has done a very good compilation of industry group chart lists. So looking at different ETFs to kind of monitor industry groups. And so I had originally started to do a chart pack for all of the commodities. Arthur Hill covered it off pretty well, and it was kind of like, why would we have 2 of those? The one thing that I would say in my chart pack is the way I've sorted my chart lists, and perhaps I could just go show that, and then we'll wrap up today so everybody can get on with their Saturday. One of the things I talk about is keeping the scan empty chart lists, the one that you're just going to use scan results and fire them into. Put those very close to the top of your list. So put a number like 00010 or something to keep them close to the top. By having them up at the top, you're not constantly scrolling like I have 350 chart lists or something, so it's crazy. But here's the way I sort my industry groups, and I think this is probably one of the best changes I've made in my organization. Is I put a number at the top, and then I do a hyphen and the alphabet character and a hyphen. Because what I used to get was like natural gas would kind of, I'd have it mixed in with energy, and so did I have it filed under energy, under natural gas or whatever. So now I can quickly check, and here's natural gas, here's oil and gas, and I can break them down into Canada, US, but keeping them all under oil and gas. So it just really helped me get the stuff in the order that I wanted them. And as you develop your chart lists, you'll have lots of them. And so each time an industry group, let's just say semiconductors, becomes the big industry group, imagine that. If you want a separate industry list for semiconductors or biotechs or whatever, you're going to put that right in here. And then anytime you want to go investigate a biotech stock, all of them are together, and you can just go view all. In this case, let's go to summary, and we could say, okay, what's gone up in the last week in a down market? And sorting by change, okay, we got some stocks that have literally been on fire. So with a really quick jump into a specific industry group, you could say, wow, these were really strong stocks while the market was pulling back. Let's go look at the chart action and see if there's some in there that I want to get in. If the market was going to bounce from here, which ones do I like? And so I think those are good ideas. And I'll probably end up putting out a chart pack about how to sort your chart lists and incorporate some of Arthur's chart lists that he's built in there, and work through it that way. But with that, I think we should wrap it all up. There is, it's been a wild market out there. I do think that looking for technical support on the 200-day for the S&P, the NASDAQ, the Russell, all of them are trying to bounce here. Institutional investors are, if they're looking for a pullback, that 200-day is a nice place to look for a technical entry on a chart. And lots of them do scans of their favorite charts, and when they hit the 200-day, they're looking to buy them. So that's a good tip just in general of a simple scan that somebody could own. What are strong stocks, and when they pull back to the 200, do I want to own them? And so institutions, they don't like to buy stocks that have run up 30%. They kind of want to get their favorite stocks when they've pulled back a bit. So with that, I'm going to wrap it up. Thanks for taking the time to join me. Anybody who bought the book, I'd really appreciate it if you could take the time to write a review. Either send it to me at gregs@StockCharts.com, or if you could actually put it in the Amazon book review, that would help a lot. And Amazon hasn't started selling them yet, so in a week when they do, then it'll start allowing reviews to show up. But that would help me out if you could explain to people what you thought of the book. Strengths and weaknesses would be good. Thanks, everybody, and have a great weekend. Bye-bye.